Welcome, good morning. Welcome to the mindset of the next gen investor. Jeff, Christopher, Brittany, welcome. Thank you very much for joining us. We'll get right to it if that's okay.
Right.
Brittany, you lead Goldman's efforts to attract and retain the next generation of wealth owners. It's fascinating. How does a giant firm like Goldman do that? And who is the next generation? How do you define them?
Thank you for the question, Brett. And by the way, hello, everyone. Good morning. It's great to be with you all. If you don't mind, maybe I'll spend just a moment on what is private wealth at Goldman and then get right to the
Absolutely.
question. So if you know about Goldman, we're one of the largest wealth managers globally. Within private wealth management, we specifically focus on clients who have 10 million or more of investable assets. Many of our clients have multiples of that. We speak to every client and really serve them in a very unique way. But overall, our goal is to help our clients maximize their impact of their wealth through really bringing investment strategies and opportunities and thought leadership using the whole breadth and depth of Goldman to bear. And maybe I'll take the definition question first, if you don't mind. You know, future investor, I actually love that title. Some define it as millennials, Gen Z, next gen is a common term. I think in wealth management circles, next gen has come to mean really inheritors of wealth. And what we found at Goldman to be tremendously beneficial is actually to think about this important investor base as being inclusive of both inheritors and wealth creators. What we found from speaking to our clients is really how they made their wealth, how they came to own it, is much less important than what they plan to do with it. So their future ambitions, how they make decisions, their preferences, what they need from a firm like ours is much more dependent on their life stage, really, than how they came to own their wealth. So definitionally, we think about this important group as both creators and inheritors of wealth. And to your question on how does a big firm like ours think about this, a little bit of that implies, I think, a common misperception, which is, don't you have to have hundreds of millions of dollars today to be a client of Goldman? And really, I'd say it's our job to make this important group understand how important they really are to us. So we actually really invest very early in these relationships. And I'll give you examples on each. As an inheritor, maybe you've actually been a client of Goldman for decades through your family. Well, we understand that you have an active choice to make yourself about what firm you want your family to work with on a go-forward basis. And so we, again, invest very early, bringing the full resources of the firm to bear for that inheritor client to make sure that they have the ability to choose us as their provider. Same thing on creators, right? We are increasingly getting to know founders of, as an example, high-growth tech companies at the earliest stage of business development. And really, Goldman's really well suited to serve them in that business growth in and of itself. So capital providers, research to help them scale their businesses, certainly how to structure their company from a tax and estate standpoint. And the goal there is really that we've built enough trust and goodwill over time such that when there is a liquidity event, we're the only firm that they're ever considering. And both of those groups are attracted to the same set of platform considerations. So they want a broad network and a highly active ecosystem of like-minded peers, and they want the firm that they're choosing to provide that for them. They're looking for, obviously, a modern investment platform. They're looking for a team that is the right fit, and importantly, that delivers this high-touch, high-service, person-to-person relationship, but with a digital overlay. Always a digital overlay for this group. And then finally, I'd say education is critically important. So we focus on those pillars in our strategy to help attract and retain that group of clients.
In what ways are you seeing those two groups evolve or change over the years? Are they becoming different, more diverse?
Yes, absolutely. So we would say, and research says this too, what we found is that this group is more digital, more diverse, and more demanding. And I say demanding in a good way, so I'll explain that. Certainly more digital, and this is a population who understands exactly what we mean there. Millennials and Gen Z are mobile first. If it's not all on your phone, you're losing that battle. And I'd say importantly though, they still want this high-touch, person-to-person relationship, but they expect that to be complemented with a very high-quality digital experience. Certainly a more diverse population. Y'all know the stats. 4 in 10 millennials and Gen Z identify as racially and ethnically diverse. Women now control more wealth than ever, and that's only growing. And actually, you know, another stat, tech billionaires are now 10 years younger than they used to be. So the group is more diverse as well, and what they're looking for is teams that represent them. So they want the people that they're working with to reflect who they are as people. And then when I say demanding, I think this is all about technology, actually. They want hyper-personalization. They want access to information seamlessly. They want simplicity. And again, they want that delivered in a way that feels like every other application that they're dealing with in the world.
Yeah, great stuff. Jeff, as the head of private bank services at Bank of America, you guys have gathered some fascinating insight into how young investors view the marketplace today. How are their views of traditional assets like stocks and bonds and stuff different than earlier generations?
Yeah, sure. Thanks, Brett. And good morning, everyone. It's great to be here with you. So as Brett said, we recently conducted a study of wealthy Americans. And the interesting thing, Brett, is this was not necessarily constructed as an intergenerational wealth survey. It was really a survey focused on the needs and preferences of ultra-high net worth households. But as we got the data back from the survey and started to study it, what we found is actually some really stark delineations along age lines. And in particular, you know, as we looked at the respondents ages 21 to 42, we noticed some real differences from the rest of the population. And I'll talk maybe just about a couple of those insights. First, 75% of respondents ages 21 to 42 do not believe that it's possible to achieve above average returns with a traditional portfolio of stocks and bonds. So they expressed a much higher preference in utilization of alternative strategies, private market investments, perhaps other real assets, real estate, art, things like that. Second insight was really around sustainable investing. What we found is a similar percentage, 75% of respondents in this same age cohort utilize sustainable investment strategies. And that compares to a much lower percentage in the older age cohorts. So when we look at the data and look at the growth in sustainable investing and the interest in that area, it's really being driven by this millennial population. And then the last area, maybe not directly related to investments, but what we found is this generation is increasingly thinking about philanthropy as part of their overall wealth and investment strategy. They want to have an impact. We call it giving while they're living, but they want to have an impact now. And they think about their philanthropic impact as an overall part of their wealth and investment management strategy.
It's interesting. So this class of investors in earlier generations was not as conscientious about philanthropic endeavors early on. Is that right?
I think that's true. I think, you know, again, increasingly what we're seeing among our clients is they want to have an impact now. It's not just about wealth preservation, but it's about creating an impact now and seeing that impact.
Yeah.
And what we see among our younger clients is deep passion around some of the causes that have risen in our collective conscious, perhaps over the last couple of years: racial, social justice, climate, emotional wellness. And so they're supporting causes that may be a little bit different from the causes that their families may have traditionally supported.
Yes, yes.
Yeah.
Interesting. Christopher, E-Trade has evolved a bit in recent months, and I guess at the same time that this market of young investors has certainly evolved and grown. What prompted so many young people over the last year or two to become active investors? Who are they, and how have you guys adjusted to meet their needs?
Yeah, so I mean, when you think about this idea of us evolving, like we're constantly evolving. We've been a digital first firm for obviously the inception of time back in the basically the mid 90s. when we placed the first online trade for an investor placed their first online trade. And as examples we go through there, we built the first mobile app for investors to place a trade online for the Apple phone. We did it for BlackBerry. So we've been part of this digital world for a very long time, and we've had to constantly evolve. And there's these different points in time in the online brokerage world where there's these pivot points where we've had to kind of change our model a little bit. Now, the example back in 2008 when there was the financial crisis, where a lot of clients were coming from full-service firms who felt that their broker was not helping them in any way. And so they came to us and looked for help. And we had to pivot our model because we didn't really have the right products for those clients. So, an example, we come back and we now have, managed products and things like that to fit the needs for some of these investors that were out there. So we made that pivot point. And then you kind of fast forward today, where there's always like little mini pivot points. But obviously in 2020, a big pivot point was the entire industry basically going to $0 commissions. Young investors are very cost conscious. And so as you see that pivot amongst the industry, we saw a really big influx of clients starting to come into the door to participate in the particular market. And if you think about it, like, $6 a trade, and I think a lot of us are like, it's not that much money, but it is if you're trying to invest $100 in the market or $500. We serve clients whether you've got, $100 or we've got people that have multi-billions that are sitting on the platform. So how do you serve them? And so that was the start of the growth. And then the accelerator started to become during the pandemic, where people from home, there was people getting checks from the government. They start to invest their money. And then we had the meme stock. I'm sure everybody's familiar with the meme stock craze, where we saw explosive growth that we've never seen before. And so we prepared, just to give you sort of some context to that comment. It was in Q4 of 2020. We were doing just north of just about 300,000 trades a day. About 3 months later, I think it was basically in February of 2021, we were hitting days of doing over 2.5 million trades. So as you think about our pivoting point, one example is, how do we have our systems handle the massive growth that we saw? That was a really sort of quick way. Not many people build their systems to handle that type of growth that we had. So we've had to do a lot on our side. The industry has had to do a lot to be able to handle those particular things. And then as an example of the younger investors during that time, as we were getting this growth, we got it across all of the different generations that were signing up for new accounts. But we had, for example, for Gen Z, 300% quarter-over-quarter growth that was happening. So we were really seeing it on the younger generation. So how do we pivot? So these clients, how did they invest? I mean, it's a good question about you going what are they looking at? And even during that period of time, think about sort of just social media. So when social media was sort of just a place where people were going around, but from financial services, it wasn't really a place that people were going to. That's completely changed. Younger investors are relying upon social media and other folks to get information, recommendation, education. So just think about that part. So we've actually made some investments in our platform to help them when it comes down to social media. So these are things that we've had to pivot from our side, from a digital experience, is that things that we never thought of before have come to fruition with this new group of investors. So it's a really, really exciting time for these young investors. And for us, just the way that, we've talked a little bit about digital first, and I think everyone's pivoting in some ways, and it's really the strategic reason why Morgan Stanley bought E-Trade is how do we get to the younger investors? But how can I serve them from a digital perspective? The world of just going back, I think from a financial advisor, I think we've all agreed that you can't just have a white glove experience and just shake their hand and expect them to come in. The younger generation is just not interested in doing that. So how do we serve them all digitally as an industry to make it a much better experience?
Yeah. Talk a bit about how do they consume information? It seems to me, I've been fascinated. It seems like young investors are just so much bolder than earlier generations. Earlier this year, I was on the golf course, right, with some guys, and there are a couple of caddies out with us. So one of the people I'm playing with, he starts talking about Rivian's IPO is coming up. We get about 2 holes down the course, and one of the caddies say, "Yeah, I just bought some." While we're walking down the course, and this young man who's in his 20s. I mean, there seems to be a real, not just awareness, but this kind of bold, kind of brave interest in being investors? How do they consume their information?
Well, I mean, I think, again, over time, as you've seen this, I think that you start with like, the media around financial services is quite large. Bloomberg obviously being a big part of that, places like CNBC, these are places where you can actually get a lot of information. And everybody's systems have come up to the point where you have so much information at your fingertips when you come into a place like E-Trade. You've got education, you've got research, you've got tools to help investors make really good decisions. And so the tools include like mobile. We talk about this mobile first. 67% of our logins in a given day is from a mobile device. Mm-hmm. So it's primary almost against, it's come to the point where it's primary for almost everybody. It's table stakes to have a really good, rich platform. But they're consuming this information. Like I said, I kind of bring this social media. We've got this, new thing, but you've got to change the way that you speak to the younger generation. Another good example is like news. If there's some really great news outlets right now, it's quite dispersed. If you take a look at some of these things, like Morning Brew is a good example. It's a summation every day of what's going on in the financial markets, but they do it in a way where it's not boring and they make it fun. And typically, if you read the Wall Street Journal, young investors are not reading the Wall Street Journal. It's a little too boring for them. They want to have something that's a little bit more personality to what you're doing. So how do you create that particular personality? So that's a big thing. And then I think for us also is for these younger investors and for us to serve 5 million, clients or households in our area, how do we serve them? How do we use the data that we have to personalize the experience for them? I can't call 5 million people. People do call us, but they traditionally want to interact with us from a digital perspective. It's 99% of the reason why they're at E-Trade. But how do I get to learn more about them in a way that I can create a personalized experience online where it feels like we do have a one-on-one experience? So we continue to find ways that we're not there yet, but I think that we're all trying to find a way. How do we actually literally find a way to connect with younger investors in the way that they want to do it, not the way that we traditionally have done in the past?
Yeah, it's interesting you point out that they're more interested in personality-driven stories. I can tell you when I was at the Wall Street Journal years ago and we really started personifying stories, the old-timers were responding, give us just the news, just the facts. But that's interesting to hear that things have evolved for young readers and young consumers. What trends and sectors are most attractive to this newest class of investors? Brittany?
Yeah, happy to start. And by the way, Jeff, I think you hit a lot of these. And our research and I think what's broadly written has been our personal experience too. So we actually had clients together in Aspen, this young investor profile. And we asked them, we said, what do you want to learn more about from an asset class standpoint? And where are you looking to invest more actively? And by far, number one, not surprising, 80% responded alternative investments. So private equity, private credit, private real estate, they both want to learn more about alternatives and invest more of their allocation in alternatives, which goes to your point. This is a more risk-seeking demographic. They're looking to add risk and to do that appropriately, but to look to learn more about that. Second, and we hear this all the time, sustainability and ESG and impact investing. And that really is across the gamut. It could be climate change, social justice, corporate responsibility. But what I find really interesting is that now we have clients or prospective clients actually coming to us and saying, what are you doing, Goldman Sachs, to help further what I care about? And so our Office of Corporate Engagement and our efforts there, which are really meant to do a lot of good in the world, also prove to be helpful in saying to our clients, we're aligned with your values also. And then the final category I would mention is non-traditional assets. So art, collectibles, yes, crypto. And I would totally agree. The ethos of the trader is back. And so having thematic, timely, actionable research that someone can act upon either on their own, on a digital platform, or through their team is sort of a new evolving trend that we see a lot.
Yeah. Jeff, what's the most or some of the most under the radar asset classes that these investors should be thinking about going forward?
Well, I actually think Brittany just hit on really the highlights, and I would totally agree with you. It's what we see from our clients, and of course what the survey showed. It's been about alternative investments, private markets. The private markets we all know and have have grown exponentially over the last 5 years plus. So we see a lot of interest there. And question is why? And when you think about this younger generation of investors, they've come of age during a period of extreme innovation across all dimensions of life. And so I think what we're seeing is a greater willingness to embrace innovative forms of investing, to embrace new technology from an investment standpoint, and maybe a little less trust in more traditional asset allocation and portfolio construction. One of the other interesting things from the survey, just around art, to pick up, Brittany, on what you were talking about, 60% of these younger respondents in our survey had purchased a piece of artwork in the last 12 months. So we, again, increasingly see art actually as an investment asset class for this group.
Great. There was a question from the audience. I think you may have seen it, Brittany. It's asking, how do you create value for people who are below 10 million net worth? How do you create value at that early stage for those folks?
And by the way, this is what we do all the time. So I think that's, again, this misperception that you need to have extreme values of wealth to talk to us is just not true. And this is really where we think we build a lot of trust and goodwill so that we can be the provider of choice when someone comes to that decision. So it really is very different for each client. I'd say on the front end, a lot of the work that we do is actually helping someone maximize their tax planning, which has nothing to do with investing, right? It's a completely advisory service that we provide to prospective clients to help them think about how their assets are structured and really how to do that well, because you can certainly have a much different outcome if you've done some thinking there. I think also we play the role of chief education officer. There is so much information out there, and there's a lot of misinformation out there also. And I think really this demographic is looking for a very quick, credible answer to their question. And we end up being that source of education. And that could be, by the way, on a weekly basis. We might be talking to some of these people thematically. What is alternative investing? How do you think about asset allocation? What is risk management? And really setting up an educational program for them and their families. I'd also say one of the things that we've seen different with this demographic is they're very focused on having everyone in their family have a relationship with us. So it's not just one point of contact anymore. And this really is heavily focused on involving the spouse. So we just did a survey where we heard that 38% of our women clients are heavily involved in decision making. 41% are somewhat involved, and only 22% not involved at all. That is a very different number than in prior generations. And so again, in terms of thinking about how we add value, it's helping bring the whole family up to speed. And what is wealth management, and how do we really add value? If you're a founder of a company, there are a whole suite of services that Goldman Sachs provides to help you capitalize your business, scale your business, take your business to the next level. And that's certainly something that we focus on for those individuals too.
Yeah, it's fascinating. Christopher, your customers are bigger, broader group of folks, I would think. Are they more sophisticated about this stuff coming in than they've been in the past?
There's no doubt. I mean, I think that the education, I think the young investors that are coming out of college today, I think, every year I think the bar does go higher for the education. So they've come in with a lot more knowledge than when I graduated college, Villanova University back in 1991. I didn't have even close to the amount of knowledge that anybody probably sitting in this room has. So we started in a much better place. And so you talked about just before even this idea around sort of under the radar types of products. A really good example from my side is options. So options is a big part of our business. Upward to 40% of our trades in a given day are with options. And the highest growth rate is in the younger sector. And they come out, that was something typically where someone would come out of college. They're just trying to learn what a stock or a bond is. And they eventually would learn about some of these more sophisticated types of products that are out there. But when you have something like a product like options, that's one of the most versatile things where you can trade them really in any types of market. You can use it to protect your positions that are in your account. You can use it to generate income. you start teaching people about these types of products out there, you're doing it at a much different thing. So they're much more educated, and the education that we're providing, because it's in our best interest to make sure that all of our clients are successful as they possibly can be. The education that we provide for free for our clients is tremendous. We've also had to pivot that. You know, back in the day, it was like we would do a seminar. We'd get in a room like this. We'd get 100 people in the room. We would teach them about investing and trading. That evolved into sort of web seminars, and you'd have a web seminar once the digital revolution started. They would spend an hour and go through an education. Now we got to do things in bite size. The attention span of, I think, all of us has become a lot shorter. So how do we provide sort of bite-sized types of information to clients? Any way we can, and I do that in ways where people can sign up and look at it. I can do things where I can connect with them through push notifications and stuff like that. How do I communicate and let them know what's happening each time? But it's getting shorter and shorter to get the attention span of everyone. We're all very busy and connected in so many different ways. So it's a challenge for us, but one that we continue to find ways to just connect with these folks, from a personal level.
Yeah, Jeff, what about you guys? That's related to the question that we have from the audience. What is the desired frequency and method of communication?
Yeah, so what I would say is it's really up to the client, and it's our job to meet the needs of the client in terms of how they want to be communicated with, when they want to be communicated with, and the frequency at which they want to be communicated with. And we see, it runs the gamut. But with this younger generation of investors, as we've been talking about, digital, mobile, that's table stakes. Making sure that, we can enable them to do what they need to do when they need to do it through our mobile app. That's a prerequisite. And then, in our case, we've got the client team there as well, and we take really a hybrid approach, a high-tech, high-touch approach, to this generation, and it really varies depending on the client. Some of our clients want to talk every single day, multiple times a day. Others, a quarterly check-in is sufficient, and it's really our job to understand the needs of the client and meet those needs.
I just want to add one thing. I think for all of us, the holy grail is not. I don't think the frequency thing is a difficult one to kind of to think about, but to me, it's about the quality of that interaction. So I think for us, we know a lot about our clients, and so when we want to have some type of a touch point with our client, whether it be a phone call or a email or whatever it's going to be, it's got to be a relevant conversation. I need to know if I'm going to present something to you or educate you on some particular thing. I think if you're going to receive and open that or have the right to open one of these communication points, it's got to be relevant to me. So I don't want to just blast. The idea of just blasting an email to 5 million clients and hoping that they open it up to sell something is kind of over. So we're becoming much more intelligent, knowing a lot about our customer, and make sure that's done. From both their sides, when you're in this high-touch business, it's a lot easier to do it when you know a lot about your client. In a digital world, it becomes a lot more difficult. So that is, for us, we continue to find ways to know our clients better and present quality interactions versus like a frequency thing from our side.
That's great. Are you guys seeing this group of young investors take a more active stance in governance issues at all?
Oh, by far. I mean, if you look at the board involvement, getting involved in sort of civic organizations, it's very much, now I don't know that it's actually different than prior generations, but this is an actively focused group, and they're looking to, again, they want to use their investment dollars for good. And so they're consuming, by the way, in a way that is aligned with their values, and they're also investing in a way that's aligned with their values.
Terrific. Great. Well, thank you. Really appreciate it from all three of you. Thanks very much.
Thank you, Brett.
Thanks, everyone.
Thank you.